This is another podcast from Alpha Business Media. Okay, so let's unpack this. Imagine an economy where money sent home by people working abroad isn't just, important, it's absolutely central. A real cornerstone. We're talking about Nepal, where remittances often hit, well, with figures like 20, even 25% of the country's entire GDP. I mean, that number alone tells you just how critical this topic is.
It's a huge level of reliance, yeah. And
Yeah.
what's really fascinating looking at the sources is that this absolutely vital economic flow is undergoing a pretty significant transformation right now. It's shifting and shifting fast. It's being driven by, well, the explosive adoption of digital financial services and all these fintech innovations.
Right, and that transformation is exactly what we're diving into today. We've got a stack of sources here for this deep dive, mostly built around a detailed report on next-generation remittances in Nepal, plus some other data points. Our mission really is to pull out the key insights from all this material and, lay out what it all means, especially for you, our listener,
Yeah.
trying to get your head around this really pivotal shift.
Yeah, and to really grasp the scale of what's changing, you first have to understand just how crucial remittances are in the first place. They do way more than just support individual families, important as that is. They're actually critical macroeconomic stabilizers. The sources show they covered a massive chunk of Nepal's trade deficit, like over 56% back in 2022, and they're vital for building up those foreign exchange reserves.
Which helps with currency stability, managing imports, all that core stuff.
Exactly.
And right at the heart of the shift, there's this new kind of user, the new generation remitter. So who are they? Well, the sources paint a pretty clear picture. They're generally younger, more educated, and just naturally more tech savvy than maybe previous generations were. Think Gen Z, millennials working overseas. They're not just sort of passively adapting to change. They are the change. They're driving it.
Precisely. And this group, they have fundamentally different expectations compared to, say, people who relied on the old, often manual ways of sending money back. They expect speed, ideally, like real time. They want lower costs than, traditional wire transfers. Convenience is huge, often meaning doing everything on their phone. It's non-negotiable. And crucially, transparency. They want to know exactly where your money is, when it's going to land. The old ways just, well, they often don't cut it anymore.
And those changing expectations are directly feeding what our sources are calling the digital wave. I mean, we're seeing just absolutely explosive growth in these digital platforms for financial stuff. Look at the numbers mobile banking users in Nepal. It went from something like 11.4 million to 26.5 million by early 2024. That's huge.
And digital wallets. The growth percentages there are even more dramatic. You've got companies like eSewa reporting over 8 million active users, 12 million app downloads, this massive reach. Khalti, IME Pay, they're both citing around 5 million users each. And the total scale. By January 2025, Nepal had something like 25.8 million digital wallet accounts. That's a growth rate of, roughly 303% in just a few years. What this data really shows is a fundamental shift in how Nepalis are willing and able to handle their money digitally.
That's not just growth. It's like a digital revolution playing out. And it translates into massive transaction volumes too, right? Mobile banking saw, RS 374.66 crore in transactions in just one recent sample month. E-wallets handled RS 37.31 crore.
Yeah, and what's really insightful here, I think, is that these aren't just channels for sending money back and forth. These platforms are becoming much more integrated, ecosystems for everyday financial life. You can do everything from paying bills, topping up your phone, to online shopping, buying tickets. It creates a much stickier user experience. It encourages people to use them regularly, often, not just when a remittance comes in.
Okay, let's zoom in on another area that's just booming digitally, QR payments. The growth here is almost hard to believe. Compound annual growth rate, CA ADGR, 230% for volume, 210% for value. We're talking over 2.34 million merchant QR codes now active across Nepal.
And here's where it gets really interesting for remittances specifically, the rise of cross-border QR payments. The sources highlight some big steps here, particularly linking up with India's UPI system, Unified Payments Interface. That's already seen transactions worth over Rs 1.41 billion. And there are moves with platforms like China's Alipay Plus too.
That cross-border piece, especially with India, that feels like a really big deal strategically.
Oh, it absolutely is. A huge chunk of the money coming from India has historically moved through informal channels, right?
Yeah.
Because it was just easier, more accessible than the formal ways. Expanding these formal, interoperable QR payment systems, that directly tackles why people used informal routes. So it's not just cool tech, it's actually a critical step in bringing potentially huge untracked flows into the formal regulated system.
Right, which has implications for economic data, oversight, security,
Everything. Yeah.
Looking a bit further ahead, the sources also talk about API banking gaining traction, banks opening up their systems so fintechs can build on top, and even the possibility of neobanks, those fully digital banks.
Yes. API banking is really changing the game. It creates this whole ecosystem where fintechs can plug in and innovate much faster. And neobanks, yeah, they have significant potential, especially for reaching that, estimated 18% of the population still unbanked or underserved by physical branches. The government seems supportive too, mentioning pilots in the FY25-26 budget. And key things enabling this are the NRB's Innovation Hub, set up in March 2025, and the regulatory sandbox they're planning. These let you test new ideas safely before a full rollout.
So if we step back a bit, what are the big underlying forces really driving this whole transformation?
Well, a really basic foundational driver is just connectivity. Nepal has seen a dramatic increase in internet and smartphone use. Internet penetration's over 55% now. And mobile connections, actually higher than the population, around 132% by early 2025. Lots of people have multiple SIMs or devices.
Which means basically most people have a device in their pocket that could access digital finance, even if they aren't yet.
It's exactly right. That widespread mobile access is kind of step one for digital money transfers to take off. But it's not just the tech. The regulatory side is also a huge driver. The central bank, Nepal Rastra Bank or NRB, they've been very proactive.
So they're not just watching this happen, they're actively pushing it along.
They really are. They've licensed loads of these payment system operators, PSOs and payment service providers, PSPs. The sources mention 9 PSOs and 25 PSPs. They're backing things like eKYC, to make signing up digitally easier and faster. And the National Payment Gateway, which helps different systems talk to each other. Their focus seems clearly on creating the right environment for digital finance to grow and, importantly, to bring more money flows into the formal economy.
And then, circling back to where we started, you've got consumer demand, that new generation remitter we talked about. Their clear preference for speed, convenience, low cost, that's actively pulling the market away from the old ways.
And pushing it towards the solutions that actually meet those needs. And this is where, the fintechs have really shown their agility, their focus on user experience for specific things like remittances. That's allowed them to grab market share and really drive adoption.
Okay, so let's talk impact. When we look at this digital shift, what are the sort of tangible changes for the people actually sending and receiving the money?
Well, the immediate benefits are pretty clear. Digital means much faster transactions, often real-time or very close to it, and they can significantly lower the cost per transaction too, because, there's less physical infrastructure involved, fewer branches, less manual handling.
And transparency, does that improve?
Absolutely. Digital transactions leave a clear trail, an auditable record. For the user, that means proof of transaction. For the regulators, that transparency is vital for oversight, particularly for AML/CFT, anti-money laundering, and counterterrorism financing. Tracking where money comes from and where it goes is just much more feasible with digital flows. That's key for financial integrity.
Does this digital wave help bridge that gap we often see between urban and rural areas in Nepal? Does it improve access?
There's definitely huge potential there. I mean, Nepal's actually done a pretty good job ensuring physical bank branches exist down to the local government level. But mobile banking and wallets, they can theoretically reach remote spots without needing a physical branch nearby, as long as there's mobile network coverage, of course.
But, and there's always a but, isn't there? We still have that last mile problem to deal with.
We absolutely do. The last mile challenge, yeah. It's about making sure that digital access actually turns into usable financial services for everyone, especially in those remote or less developed areas. You still have infrastructure hurdles, reliable internet, consistent electricity. They aren't universal. And maybe even more critical, there's a significant digital literacy gap, particularly among older people or those in rural areas with less formal education.
Yeah, the sources mention the national financial literacy rate is still only around, 57.9%?
That number really highlights the challenge, doesn't it? So while digital channels give people the tool to access formal finance, there's still the hurdle of digital capability. Knowing how to use the app safely, how to avoid scams, even just the practical issue of turning digital money into cash you can spend in places where digital payments aren't common yet. These are real last-mile problems that tech alone can't fix.
Yet, despite those hurdles, getting remittances digitally can be that crucial first step into the formal financial system for people who were previously unbanked, right?
That's a key point, yes. If someone starts receiving money into a mobile wallet or even a basic bank account just because it's the easiest way to get their remittances, well, they've put a foot into the formal system. And that potentially opens doors later on for accessing other banking products. It's a pathway to broader financial inclusion, and that's something the NRB is actively encouraging.
Okay, let's shift focus now to the established players, the commercial banks. This really rapid digital shift, the rise of all these fintechs, it must be creating some pretty big challenges for them.
Oh, undoubtedly. The most obvious one is just intense competition. These fintechs, these digital wallets, they're agile, they've built up huge user bases, and often they run leaner with lower overheads than traditional banks. That potentially lets them offer better pricing or, slicker interfaces for specific things like money transfers.
And as everything goes digital, cybersecurity becomes absolutely paramount and a potential weak spot, too.
Critically important, yes. More digital transactions mean more potential attack vectors, phishing, fraud, data breaches, you name it. And Nepal has unfortunately seen its share of cyber incidents affecting different players in the past, payment systems, ISPs, even banks. So building and maintaining really strong cybersecurity is essential. And just as important is building customer trust that digital platforms are actually safe. The NRB gets this. They've issued cyber resilience guidelines.
And that digital divide we talked about earlier, that's also a challenge for banks trying to reach all their potential customers, isn't it?
It is. If a bank's strategy is purely digital first, without thinking about hybrid approaches or tackling those literacy and infrastructure gaps, they risk leaving behind segments of the population they used to serve through branches. They need a way to bridge that.
Plus, just navigating the changing rules and regulations must add layers of complexity.
It definitely does. While the NRB seems pro-innovation, the pace of change means rules around data protection, consumer rights, and especially AML-CFT are constantly evolving. And Nepal's recent experience, like being on the FATF gray list, puts extra pressure on banks to ensure really tight compliance, especially with digital channels which could be exploited. That compliance effort adds cost and complexity.
Okay, so a fair few challenges there. But the sources also point to some pretty significant opportunities for the commercial banks in this new digital remittance world.
Absolutely. Banks still hold some key cards. They have established public trust built up over decades, and they have existing infrastructure, even if it needs a digital makeover. The core opportunity is to leverage those strengths and blend them with real digital innovation. A primary path seems to be investing heavily in truly customer-centric digital platforms.
So really focusing on the user experience, making apps and websites super intuitive, easy to use, maybe like Nepal Bank's N-Bank app, which the sources mention has a remittance feature built right in.
Exactly like that. The benchmark for user experience is now set by the fintechs, frankly. Banks need to meet or beat that. And providing multi-channel support is also key digital options alongside accessible help for those who need it. Another huge opportunity is strategic partnerships.
Teaming up with the very fintechs that look like competitors.
Precisely. Banks can tap into the agility and user base of fintechs and PSPs through collaboration. It lets them expand their digital reach and offerings much faster than trying to build everything themselves from scratch. We see examples like Global IME Bank working with the IFC, or NIC Asia Bank partnering with Khalti and Wallet. API banking is really the tech glue that enables these kinds of win-win integrations.
And banks can offer more than just the transfer itself, right? Like adding other innovative products.
Yes, this is a massive opportunity to deepen those customer relationships. If banks understand remittance patterns, they can offer targeted products. Think about linking remittance accounts to, say, microinsurance, special savings plans, maybe even small loans based on remittance history, or simple investment options. The sources really highlight personalization based on data here. Banks can aim to be like financial wellness partners, not just places to move money.
Which ties right back into that bigger goal of financial inclusion.
It absolutely does. By offering digital remittance services, banks draw previously unbanked people into the formal system. That creates an opening to offer them more banking products down the line. It builds loyalty, fulfills a social mission which the NRB also supports, and offering financial literacy programs alongside these digital services really helps make it stick.
And all that data being generated by these digital transactions, that sounds like a huge potential asset just sitting there.
It's potentially an untapped goldmine, yes, if banks can actually use it effectively. Analyzing digital remittance data can give incredible insights into customer behavior, their spending, their needs. You can use that data for personalization, better marketing, refining products, and crucially for developing alternative ways to assess creditworthiness for remittance recipients who might lack a traditional credit file. But, as the sources point out, that takes real investment in data analytics capabilities. It's not trivial.
And banks themselves can be more proactive in pushing these cross-border digital solutions.
They certainly can. Actively getting involved in promoting things like the cross-border QR link with India's UPI, or integrating with international digital wallets. That allows banks to capture more of those money flows. It could help formalize even more informal transactions and attract customer segments who just prefer mobile payments anyway.
Taking a step back again to the sort of broader Nepalese context, how does that influence all these challenges and opportunities we're discussing?
While macroeconomic factors always play a background role. While, GDP growth forecasts look okay, around 4.5% for FY25, and inflation is relatively low right now, about 3.39%. There are some worries, particularly around rising NPLs, non-performing loans in the commercial banks. They averaged 4.83% in Q3 of FY24-25. Higher NPLs can squeeze a bank's balance sheet and
Wow.
potentially make them a bit more cautious, more risk-averse about making big new investments in digital tech, even if they see the long-term opportunity.
And then you have the unique cultural factors that always shape how technology gets adopted, how financial relationships work.
Oh, absolutely crucial. Trust is just paramount in Nepal. For any digital service to really take root, it has to consistently earn and keep customer trust through reliability, security, clear communication. Word of mouth is incredibly powerful too because community ties are so strong. A good or bad digital experience can spread like wildfire. And then there's the concept of afno manche.
Which translates roughly as our people or kind of informal networks.
Yeah, something like that, but it's nuanced. Well, sometimes it can mean, favoritism in this context of adopting new things. Afno Mancha highlights how much personal relationships and community validation influence what people do. People often trust a recommendation from someone in their network far more than slick advertising. So for digital adoption, this means maybe partnering with trusted local agents or community leaders, or just making sure these digital services get talked about and validated within those networks. That can be way more effective than just impersonal digital marketing. Banks really need to understand these deep cultural currents to build strategies that actually work.
Okay, so if we try and pull all of that together, what are the absolute must-do strategic actions for banks trying to navigate this whole transformation?
Looking across the sources, the key strategies that come through are, first, relentlessly prioritize building those customer-centric, really seamless digital platforms. User experience is king. Second, actively look for strategic partnerships with fintechs to leverage their speed and reach. Don't try to do it all alone. Third, develop innovative, value-added products linked to remittances. Become more than just a transfer pipe. Be a financial partner. Fourth, build and maintain trust through rock-solid cybersecurity and transparent compliance, especially vital given the AML CFT focus and FATF history. Fifth, invest in bridging that digital divide. Targeted financial literacy, maybe hybrid service models. Sixth, develop the capabilities to actually use remittance data for insights and personalization. And finally, seventh, stay proactively engaged with the regulators as this whole digital landscape keeps evolving.
It certainly sounds like a really profound shift is underway, fundamentally changing how money moves in Nepal, moving from, a largely physical agent-based system towards a future defined much more by digital
It
channels.
is a massive shift, yeah. And while fintechs were maybe the initial spark, the disruptors, commercial banks, are still uniquely positioned. They have that legacy of trust, the infrastructure, the regulatory relationships. And it's a big if, they can successfully blend those strengths with genuine digital innovation and a relentless focus on understanding and serving what the new generation remitters and their families actually need and want, well, then they're not just positioned to survive this change, but potentially to really thrive in this new era.
Which leaves us with a powerful thought to perhaps mull over as we wrap up. As Nepal's absolutely vital remittance market goes increasingly digital, how will its future successfully manage that balance? The balance between the undeniable efficiency and speed of new technology and that deep-seated cultural need for trust and personal connection. Can the banks and the whole digital ecosystem truly become those comprehensive financial wellness partners for Nepali families by mastering that really intricate, culturally nuanced balance?